Hey, what's up, everybody? What is the difference between a business and a charity, right? A nonprofit and a for-profit. If you think about it, both have goals, both have strategy, both have priorities for maybe even a given quarter or a year. Both have metrics that they're watching, both have employees, both have marketing, both have sales and conversion, right? So both have a brand. So in those ways, they are exactly the same. The difference is one has an economic model that produces profit and one does not. And it may be that seems very obvious, but I think a lot of us forget that, especially in the real estate industry. And so if you are running a business or what you're calling a business that doesn't have an economic model, you aren't a business. You may very well be a charity. And I'll tell you, this is what I was running for years when I was starting a real estate team way back in the early 2000s here in Minnesota. I woke up one day and looked at my numbers and realized that my personal production was paying for the success of my real estate team. That is the definition of a charity. If I had pulled my production out, I would be losing hundreds of thousands of dollars. That's a problem. So what you need to do, I'm going to share my screen here, is that you need to make sure that you have an economic model that works for you. So you need to have an economic model. Well, what does that mean? Well, I literally want you to think of a pie, a circle, a pie chart, because that is your business. This is the income. Let's say this is the total income from the business, not just the amount of money that hits your bank account, but the total income into your business. Okay. Let's say in this example, it was $1 million. Maybe your production was, 600,000 and the team did 400,000. Okay. So total it was $1 million. The question you need to answer is, how am I going to split up this pie? What is my economic model? Right. And really, there's only a few pieces of the pie here when it comes to a real estate business. So the first one is what we would call your costs of goods sold, right? So let's just say that's 45%. So 45 cents on every dollar went out to pay your costs of goods sold. That is going to be your agents pay, the broker split, right? So that's typically the main pieces of it. Maybe it's an ISA that you're paying. Maybe you choose to include Zillow Flex fees out as your cost of goods sold. But basically, whenever somebody is paid at closing, a portion of the commission, that we'd consider the cost of goods sold. So you can see a huge chunk of the pie just got paid out in cost of goods sold. So the second piece of the pie that has to get paid out are your operating expenses. So in this case, 30%. So that's another piece of the pie that just got paid out, or that you didn't actually get to keep, right? So that leaves you with net profit and maybe your owner pay, which would be your salary as the owner. That is the final pie. And essentially, I don't care how you split this up. It could be it could be a huge amount in salary. I hope not. But it could be a huge amount of salary and a little bit of profit. It could be a lot of profit and a little bit of salary. It could be that you pay yourself like an agent and you have a little bit of income from that as well as salary. But whatever it is, what did your business provide you, the owner, in actual dollars that you didn't spend, you didn't give to the agents and broker, and you didn't spend on stuff? What's left? That's your net profit and owner pay. And so the question is, what is that going to be? What percentage is that going to be for you? This is your economic model. Here's where you can get in trouble. In this case, this would be 25%, right? Because we have 45% going out in cost of goods sold right here. We have 30% going out to all the vendors, the stuff we buy, 30% in operating expenses. That leaves us, because that's 75% of the pie is gone, that leaves us with net profit and owner pay of 25%, right? This is the actual green dollars that we got to keep. Now we've got to split that with the government, of course, and pay tax on that. But that's our income as the owner operator in the team. The question is that the model that we wanted? In this scenario, the cost of goods sold would have been $450,000 because it's 45%. The operating expense would have been $300,000 because it's 30%. And remember, in this example I used, we did $1 million in total revenue. And so then my net profit and owner pay would have been $250,000. Here's where we can get in trouble. Because if you remember at the beginning of this example, the owner did $600,000 in revenue, the agent income, the team income was $400,000. Now, if this was the scenario in my business, we'd have a problem because $450,000 went out in cost of goods sold. Maybe the agents got $350,000, the broker got $50,000, which would be a lot for a broker. The ISAs maybe got, $50,000. Maybe Zillow Flex got whatever, $50,000. And so all of a sudden we paid out all this money in cost of goods sold. Then we went ahead and spent $300,000 and we're only left with $250,000. And we did $600,000 in our own personal production. We would have been better off just being an individual agent in this scenario, right? We lost $350,000 on our own production. If we only made $250,000 and we did $600,000 in our production, this is the definition of a charity. So we have to be very much aware of our economic model to make sure that we are truly running a business and not a charity or a nonprofit. So really the only difference, in my opinion, between a charity, nonprofit, and a business is whether or not there is profit in the business. Is there an economic model that reflects a business and not a charity? Now, of course, there's only two places you can screw this up. Number one is your cost of goods sold is too high. So your splits with your agents are wrong. You will never be able to exit production and still make money. And then their operating expenses. That's the second place you can screw this up, is you're overpaying in operating expenses. Now, I'm not saying 30% is too high. I'm not giving you any advice on percentages in this video, but it just shows you that there's only two places you can screw this up. We've got too much going out in cost of goods sold, and or we're spending too much. You've got to get your model right. So I hope that's helpful. Make sure that you are not running a charity and that you're truly running a business by having a solid economic model. If we can be of help, we'd love to help you get clarity on your business through bookkeeping. We do bookkeeping for real estate teams only because we ran a real estate team for many years in Minnesota. And the other thing that I have for you is we have a business tool called the 5-Minute Budget. You just go to 5minbudget.com. And it's a tool you can use. It's a one-page spreadsheet to kind of play with your economic model. How's this going to work for you? So if you go there, there is a 23-minute video of me explaining how to use that tool, and it's there for you to use. So hopefully that's helpful. Go to simple-numbers.com if we can be of any help to you for a quote on bookkeeping for your real estate team. Take care.